Ever felt a flutter of curiosity about the stock market, but felt lost in a sea of jargon and complex charts? You're not alone. Many are intrigued by the financial world, but are deterred by the perceived complexity. The stock market, with its fluctuating graphs and terminologies, can indeed seem daunting. However, don't let this intimidate you. The language of finance is not insurmountable. It requires gradual understanding and patience. More importantly, it needs a willingness to learn. Today, we're breaking down the world of investing into simple, manageable steps, dispelling uncertainty and embracing clarity. First things first, understanding the stock market means grasping the basic concepts. This domain, often referred to as the financial heartbeat of the global economy, can be daunting to newcomers. The world of the stock market can seem complex and intimidating, but in truth, it's built upon a relatively simple foundation: the exchange of stocks. When we talk about stocks, it is essential to grasp what they represent. Stocks are not just pieces of paper or abstract concepts, they are much more. They are a significant, tangible aspect of the corporate world. They are instrumental in illustrating the financial pulse of a company, showcasing its economic health and potential. At a primary level, stocks represent ownership in a company, an ownership that carries with it a set of rights and responsibilities. This form of ownership is typically referred to as equity. When you acquire a share, you're not just acquiring a piece of paper or a number on a screen. No, you are acquiring a small piece of a company, a slice of the corporate pie, if you will. The notion of purchasing a share of a company may seem strange at first, but let's frame it in a different light to provide a clearer understanding. When you buy a book, you are buying a physical object, sure, but you are also buying the intellectual property within that book. The ideas, the story, the knowledge. It's not just a collection of papers bound together. It's a repository of thoughts, ideas, and wisdom from the author. Similarly, when you buy a share, you are buying a piece of a company. It's not just a certificate or a digital representation. It's a part of the company's essence. The company's assets, its intellectual property, its brand, all of these are now partially yours. You become a part owner of these elements. This is where the concept of shareholding comes into play. The more shares you own, the larger the stake in the company you hold. The concept of shareholding is similar to voting rights in a democracy. Each share is like a vote in corporate decisions. It's akin to having more voting power at a shareholders' meeting. Every additional share you own increases your influence over the company's direction and decisions. You are essentially becoming a partial owner of the company when you acquire its shares. This ownership is not symbolic. It has real-world implications. Just like owning a larger piece of land gives you more rights and privileges, owning more shares gives you a larger say in the company's operations, its direction. Acquiring more shares is akin to increasing your stake in a venture. The more shares you own, the larger the portion of the pie you hold. This is a fundamental principle of the stock market. Each share you own entitles you to a greater claim on the company's assets and earnings. The bigger the piece you own, the bigger your stake, and consequently, the larger your potential gains or losses. It's crucial to understand that the stock market is not a one-way street to riches. It's a dynamic environment where fortunes can be made and lost. The stock market is not just about making money, it's about participating in the growth and success of businesses you believe in. The rewards are not just financial, but also the satisfaction gained from being part of a company's journey and contributing to its growth and prosperity. The next step, an essential one, is to familiarize yourself diligently with financial terms and statements. As an aspiring investor, you must understand that these intricate terms and statements are not mere jargons. Instead, they are the eloquent language of the volatile yet rewarding stock market. They effectively communicate vital insights about a company's overall health, sustained performance, and financial stability, often dictating the market trends. Mastering the understanding of terms as fundamental as earnings per share, a measurement of a company's profitability, or price-to-earnings ratio, which compares a company's current share price to its per-share earnings, or return on equity, indicating the profitability of a company in relation to stockholders' equity, can seem overwhelming at first glance. However, it's crucial to remember that these complex-sounding terms aren't insurmountable. With patience and consistent effort, you will not only understand these terms, but also leverage them effectively. And once you get the hang of them, they don't just stay as terms or ratios, they transform into powerful, indispensable tools in your investing toolbox. Once you've got the basics covered, it's time to venture into the expansive landscape of research. Comprehension and understanding are the basic pillars of success, and in the world of investing, they become the foundation for making intelligent, informed decisions. Start by looking into the company's financial health. Understand its revenue streams, profit margins, debts, and assets. Take into account its performance over the years, its growth trajectory, sector performance, market share, and competitive positioning. Go beyond numbers and look at qualitative factors such as its management quality, corporate governance, and brand value. Evaluate its future prospects by assessing its business strategy, innovation potential, and market trends. Remember, the aim of investing isn't achieving rapid profits, it's about fostering and nurturing long-term growth. Now, what about risk? You might think of it as an unavoidable element when it comes to investing. It's a part of the process, a component that is as inherent as it is daunting. However, there is no need for alarm or apprehension. You see, managing risk is not an impossible task. It can be done effectively through certain strategies. One such powerful strategy is diversification. What diversification means is, instead of allocating all your resources, all your hard-earned money into a singular investment, you spread them across multiple areas. You distribute your eggs in more than one basket, if you will. This method is incredibly beneficial as it helps to equalize any potential losses. It effectively shields your investment portfolio, ensuring its well-being, maintaining its vitality. This helps to balance out any losses and keeps your portfolio healthy. And lastly, remember to stay patient. The world of investing requires not just your money, but also your time and patience. Remember, it's not a high-speed chase, but a long-distance marathon that requires strategy and endurance. It's not about getting quick money returned. It's about the gradual growth of your wealth. It might take some time, maybe months, perhaps even years, to see substantial returns on your ventures. However, it's essential to remember that this is not a quick process, so don't lose hope. Undeniably, the journey to financial growth is just as important as the destination. In summary, getting started in the stock market involves understanding the basics. You need to grasp some basic concepts such as stocks, bonds, and mutual funds. It's crucial to familiarize yourself with financial terms to be aware of the industry's lingo. It's equally significant to do your research. Keeping abreast with market trends, company news, and sector-specific insights is vital. Managing risk is another key aspect of investing. It's not about avoiding risk, but rather about managing it wisely. It also entails practicing patience, as the stock market is not a sprint race, but more like a marathon. It might seem like a lot, but once you get started, you'll find that it's an exciting and rewarding journey. Here's to your future success in the stock market. Before we wrap up, here's a comprehensive list of some vital tips for you as you take the initial steps in your journey through the complex yet highly rewarding world of stock market investments. First and foremost, always make it a point to stay updated with market trends. It is incredibly crucial to remain well-informed and maintain a keen awareness of the global economic climate, political developments, and industrial shifts. Staying abreast of these changes can help you predict market movements effectively and make informed decisions. Secondly, refrain from letting emotions dictate your investment decisions. The process of investing calls for a balanced and rational mindset, not one by fear, greed, or other emotions. It is of utmost importance to remember that hasty decisions influenced by emotions often lead to regretful financial. Hence, maintaining an objective stance can help you make wise and profitable decisions. Thirdly, make it a habit to regularly review and assess your investment portfolio. This crucial practice can reveal potential opportunities and highlight areas in your investment strategy that may need or improvement. Periodic reviews give you a chance to reassess your financial goals and realign your investments accordingly. Fourthly, remember the age-old wisdom. Don't put all your eggs in one basket. Diversification is indeed the key to mitigating risk in the world of investments. Ensuring that your resources are spread across different sectors and investment instruments can help cushion against potential losses. Lastly, never hesitate to consult with financial advisors if the need arises. These professionals can offer invaluable insights and provide guidance based on their expertise and experience. They can help you navigate through the complexities of the stock market and make prudent choices. Remember, the key to successful investing is continuous learning and adaptation. So continue to learn, adapt, and watch your wealth grow.